This Week in Startups is brought to you by Embroker. The Embroker Startup Insurance Program helps startups secure the most important types of insurance at a lower cost and with less hassle. Save up to 20% off of traditional insurance today at embroker.com/twist. While you're there, get an extra 10% off by using offer code TWIST. Checkout.com. With Checkout.com, your business can innovate, adapt to your markets, and make smarter financial decisions faster. If your business takes payments online, you need Checkout.com. Learn more at Checkout.com/twist. And OurCrowd helps you invest early in pre-IPO companies alongside professional VCs. If you're interested in investing, you can join OurCrowd for free at OurCrowd.com/twist.
Hey everybody, welcome to This Week in Startups. You asked for a news roundtable. You asked for the Acquired FM boys to come back. Well, here they are. Ben Gilbert, David Rosenthal, in their 5th, 6th, 7th appearance. Who knows? They've been on the pod so many times now. If you don't know their podcast, it's acquired.fm. And of course, Ben is the co-founder of Pioneer Square Labs and the PSL Ventures Startup Studio VC Fund in Seattle. David Rosenthal is the co-host of Acquired.fm, and he does not wet his beak. No, he does. He's an independent angel investor.
That was low.
He likes to wet his beak and a startup advisor. When you advise a startup, what you get, like 25, 50 basis points? What do you get? A little chip there like I used to back in the day?
I usually, mostly I'm angel investing these days. Sometimes I do invest a little and advise a little. Specifically, I usually can help on fundraising rounds, having been on the dark side as a VC.
Right. But you don't take a percentage of the round. You a percentage of the raise. You just become an advisor for a year or two?
Yeah. No time limit, but...
When you do the advisor agreements, you use the Founder Institute one that's nice and clean, where you put the scope of work and the duration and everything, or do you just do it on a handshake? How does it work?
Usually most of what I'm doing is angel investing. So almost all of, I don't think I've ever been an advisor and not an investor. So I angel invest alongside. And then if I'm like being particularly helpful or helping on a specific thing,
they might give you like an extra 25 basis points or something.
Yeah, exactly.
What's the typical ask for a seed stage company? 50 bips? 25 bips?
For advising? Oh, I don't ask at all. It's just like if the founder thinks I'm being helpful.
Oh, they'll just give it to you. So you just say whatever. See, in my early days, I would put in 10 to 25K and then ask for 25, 50 basis points and try to do some work. But then I, got a bigger chip stack and I started investing more. What's your typical angel size, David? 10, 20, 30K?
10, 20. Although I will admit, heard it here first time, I'm thinking about joining you. Well, not joining you on AngelList because you have your own platform now, but considering rolling fund, syndicate, there's so many options out there now. Yeah,
you should do a syndicate. And if you do a syndicate and you want to do it at thesyndicate.com, I don't want to compete with AngelList. I'm not really competing with AngelList, but we've done so well with the syndicate now. I have a problem. I don't have enough inventory of companies. And I was just at my staff meeting today. The last 4 or 5 deals are all 200 or 300% oversubscribed because you typically have a small allocation, right? 500K, $1 million.
Yep.
And they're all coming in double, triple. It's really weird. And then I looked at it and I was like, oh, we quadrupled the size of our syndicate. It's 7,000 members now. And we're adding 100 a week in and week out. So we're going to get to that 10,000 I set up as
Jason,
a goal.
I can't hear you over all this flexing. It's crazy. It's like this weird distortion.
But here's the thing, Ben, should he do a rolling fund or should he do just deal by deal carry, easy breezy syndicate? Which is a better thing in your mind, Ben? Because you and I both have funds. I have a fund and a syndicate. I'm curious, when you look at it, do you think these rolling funds make sense or not?
I do think rolling funds make sense.
Okay, why? Explain what a rolling fund is and explain to the audience why it makes sense.
Well, there's a lot of nuance between the two, but the thing that makes a rolling fund, to me, as someone who's not doing either or contemplating either, more attractive is you get the capital commitment up front. You're not on a deal-by-deal basis going and rounding up, hey, who wants to do this one with me? I mean, frankly, it's the attractive thing about being a venture capitalist too, is where you secure the capital and then you get to decide the investment, and you can do that on a short timeline rather than needing to go.
I mean, we all know how these rounds are coming together. It's like, even in cases where I'm working with the founder, helping them fundraise, orchestrate a process, like it's coming together in a week. I'm worried about a syndicate coming together in that period of time.
That is challenging. Yeah. See, that's where the fund plus syndicate works really well, because we can say, hey, we'll put 250 in from the fund and we'll syndicate 500. And we kind of get the best of both worlds, you know what I'm saying? So you can kind of really...
Well, and Jason, the way you have it set up too, where if you're this oversubscribed on deals, then syndicates work great too, because you're never sitting there waiting for weeks for somebody to commit for that last piece. You got a lot of demand.
That's right. So if people don't get their paperwork in time, the train leaves the station. We're not holding the train. There's 150 people on the train. We're not holding it for the 151st. But when I was starting, you're all right, Ben, if we were at 50 and I need to get those last 10 for calm.com in for 5K each to get that 50K, and I would hold the train for them because I needed them. I needed to book those seats, as it were, right? So it is interesting.
But the big game changer for all of this, though, is publicly soliciting, having this be on a incremental basis versus a 10-year life cycle fund.
So those are two different unique things. Explain to the audience who are neophytes, what do those two things mean, practically speaking, in plain English?
Well, okay, so on the fund life cycle thing, let's take rolling funds. To me, this is huge. The ability to flex up and down on the size of the fund as needed. I worked at Madrona in past life, big, long established VC firm. Raised my own fund with a few partners, $55 million fund. We had to go out. We had to go to institutional capital, go to all these LPs, universities and the like. We had to put together $55 million off the bat up front with the idea that that's going to last us a couple of years of investing plus pro rata, get it all arranged up front. Well, then you hit market and you don't know if you can deploy $55 million or $10 million or $200 million. But it's all got to be set in stone up front before you know anything.
Or if seed rounds double while you are out fundraising and suddenly your fund strategy that was predicated on a certain number of bets at a certain check size, oh my gosh, the whole world's different.
Which is happening to us as we speak. And the bets are in quarterly increments. So if you have a fund that is going to invest primary capital over 3 years and follow on over years, 4, 5, 6 or whatever, you got a certain window of time here. Here it's quarterly. So I can make a 5K commitment, 20K a year, and I can skip as an LP. I can be like, you know what? David's doing a great job. I want to double. I feel like David's hot. I'm going to increase my bet size in Q2. Oh, I feel like David didn't send an update. I'm going to skip Q3 and send him, hey, did I get an update? How's our business doing? And I don't want to say a short leash, but it does put, I feel like the GP, especially a new one, you're not a new one, you're experienced, but for some of the new GPs out there, it does let the LPs keep them on a shorter leash, doesn't it?
Well, it does, but also, I think one of the things I certainly found raising a traditional first-time fund is that you can think about your strategy all you want, but until the battle plan meets the enemy, it's hard to know. And so you don't really know what is going to make sense for you as a strategy for a fund. You hit the market with a large fund and it turns out it makes sense to do smaller check sizes instead. Well, you can't, sorry, or the opposite. So I think it gives LPs a chance. Well, it democratizes access to who the LP class is. That's the next thing about publicly soliciting. But
let's explain, Ben, what does it mean to publicly solicit versus what you and I do when we raise a fund?
Yeah, so when you are going and raising a traditional fund, and you're not only raising from just accredited investors, but in fact qualified purchasers, and even more stringent requirement of the level of I think the wording in the law is the level of sophistication of this investor, which frankly is bound or tightly coupled to wealth. So people who already have a lot of money have access to invest in traditional funds. And of course, institutions do. But individuals who are just looking to deploy a little bit here and there, maybe because they feel like the stock market's too hot, or they don't want to pour it into local real estate, or their interest rates in their savings account aren't doing anything. So, hey, maybe it'd be kind of fun to get into startups, which could be a high yielding asset class if you invest in the right manager or the right startups. But of course, with traditional funds, that is not currently something you can do. However, with rolling funds, not only can the everyone sort of invest, which I think is true. Correct me if I'm wrong, David, but you can actually ask
be an
for it
accredited
publicly.
investor, but the requirements for that are much lower.
Here's the nuance: you can publicly solicit, but they still have to be accredited. But then you have to do a higher level of verification, which I think Assure Fund Management and AngelList, both of those services will do that for you. They charge $50, I think, and they just have to have an accountant or an attorney, I believe. People can look this up or fact check it. They need to look at the bank statement or a letter from the person saying, okay, this seems legit. And there's somebody whose CPA or legal, degree is on the line for saying this is an accredited investor. Now, and these fall under the 506B and 506C offering rules, I believe, by the SEC. And so the innovation for the rolling funds was, hey, the LPs make commitments, limited partners make commitments quarterly, and they can change them, which you can't do in a regular fund. You pick for a regular fund. I'm going to be in for Ben's fund or Jason's fund for $250K. You can't say
you can't change them.
$5K this quarter, $10K this quarter, whatever. But then the public solicitation is really amazing. You say, hey, I'm raising.
Yeah.
And I'm always raising.
Yeah.
And so Ben,
this is the
make
game
you a little
changer.
jelly of David? Are you a little jelly of David there? That he can go public solicit?
Well, I mean, Jason, you figured this out before anybody, right? For folks like you, like us that have a platform of, whatever size, a following, like it, this is completely game changing. The percentage of acquired listeners who are institutional LPs of the sophistication, size, accreditation that would make sense to invest in a traditional fund is 0.01%. The percentage of LP of listeners to our shows that are accredited investors, have the sophistication, knowledge, desire, willingness to invest in funds, but don't meet those requirements is, I don't know, 10%, 15%, 20%, orders of magnitude more.
Yeah, it's pretty dope. And the unfortunate thing is we hit critical mass and we don't need to do public solicitation now. We don't need any more LPs. And so now that we're on the other side of it, it's like, I would like to do a public solicitation and allow more people to know about it, but I can't because we've already hit critical mass. We already have these funds. So now
Do you have a maximum commitment size?
You can do $10 million and up to 250 people, I think, in this process, I think is the limit. And we don't hit that. So, I mean, we just hit our largest deal ever for the syndicate, and it was 3.7 million, 3.2 from the syndicate, 500 from our fund. And
wow. So you're a legit, check size firm.
Series A. It's like a Series A firm. Yeah. So we started as a syndicate doing seed, and now we're literally doing $1 million, $2 million, $3 million thing. So it can happen, but it has to be a pretty robust company. All right. When we get back from this quick break, now that we've talked shop and warmed the audience up, something crazy happened. Imaginary money is worth a lot of real money. Bitcoin has broken $50,000. It's not a bubble. Is it a bubble? Is it not a bubble? Ben and David will tell us, should you put all of your money into Bitcoin or not when we get back from this quick break. Every startup needs business insurance, and you should look no further than Embroker, Embroker. If you don't have insurance, you failed one of the first steps of being a world-class founder. Embroker's technology saves you time and money. Prices are up to 20% lower, and you're going to get better coverage than the incumbents provide. You go from sign up to quote and purchase in 10 minutes. And when you work with Embroker instead of business insurance incumbents, you're not dealing with large, slow corporations, and the process is completely transparent. There's no opaque pricing. Nope, you're just going to get it done really easy. And there are really 4 types of insurance you need to have for your startup: cyber insurance in case you get hacked, D&O insurance. You've heard of this, directors and officers. That's if, somebody does something dumb and you get sued. You want the board of directors and the officers of the company to have lawyers and protection. And E&O, that's errors and omissions. I know about this one because I ran magazines. This will help you scale because all of your major customers are going to ask you to have E&O in order to close a deal. And finally, there's EPL, Employment Practices Liability. This covers harassment, wrongful termination, and more. So get these things dialed in. It's a really easy process. I just want you to go to embroker.com/twist, EMBROKER.com. embroker.com/twist, embroker.com/twist. And while you're there, you'll get 10% off using the offer code TWIST. And it's already great prices. So thanks again to Embroker. Go ahead and check out embroker.com/twist. Okay, we're back. Ben, we have a lot of listeners. David, we have a lot of listeners on the line. They have liquidated all of their equities. They've got a ton of stock. They're in their Coinbase accounts.
They got grandma's 401k.
Their entire net worth and 401k into Bitcoin. Should they do it? Yes or no? Ben, go.
Wow. Something. This is not investment advice, yada, yada, yada. And also, I like the question that you
get our lawyer on the line.
Exactly.
I like the question that you went to commercial with, which is this a bubble? And David and I spent like an ungodly amount of time researching Bitcoin for a massive episode that we did in January. And
which is it's crazy. It's like our biggest acquired episode ever by like 25%. It's a month old.
Yeah. If you talk about imaginary money, you get ratings for sure. Especially when it's going up.
It's like tweeting, like, do you have Google Wave invites? Like, you just get all these people like spam following you for a decade thereafter. Anyway,
do you have a Clubhouse invite?
The most interesting sort of realization that I had, and this is thanks to the Paradigm folks, was, yeah, of course it's a bubble. All money is a bubble. It's just a really, really long one. And this was like an interesting heads up for me, where if you're buying a stock, and let's not talk about the stock market today, but talk about the stock market a decade ago, you're buying something that represents the intrinsic value of the underlying asset. It's all the future profits that company's going to make. Well, if I'm buying Bitcoin, or I'm buying a US dollar, there is zero underlying value. The entire value is in the scarcity value and the fact that somebody else believes that it's worth the same thing or more than I am. So it makes it worth holding. And of course, the US dollar has been, for 50 years off of the gold system. So it's been no intrinsic value, sort of exclusively a bubble ever since then. Bitcoin, of course, is the same thing. We've just seen these rapid, boom and bust cycles. At the end of doing this whole episode where I came down, I am so much more excited about Bitcoin than I was going into it. Like I absolutely get how it and why it will be a long-term store of value. Do I think it's an effective currency? Absolutely not. But it does seem that the world has kind of moved on to that, moved away from that, and is really thinking about Bitcoin specifically much more as, hey, this is digital gold. And I'm on board with that.
It's currently at a market cap of $974 billion. There's literally $1 trillion. It's basically like an Apple a couple of years ago is the
half
value.
An apple.
It's half an Apple now, but it was a full Apple just a year ago. Literally for something that doesn't exist in the world except for some servers mining some hashes.
Wait. I want to make a point though. That this is one thing that I really tried to land on the episode. I hope we got across.
Yeah.
It's not totally that it's nothing. So a Bitcoin is the reward for doing work to verify the robustness of the system. Like it's like you get paid for it. It's like, you go to work at a bank, you're working at a bank, you're working at the Fed, like you get paid for the work that you're doing.
Okay.
The miners, so every Bitcoin came from getting paid for that.
Yes, from doing busy work. It's like literally somebody wrote on a piece of paper 100 times, I will not steal ice cream.
All the other transactions.
It's literally I will not steal. It's that so somebody can't go into your Coinbase account and take all your Bitcoin.
But just to put a pin in this, it's worth more. Bitcoin is now collectively worth more than Facebook, and people use Facebook and Instagram all day long. It doesn't make any sense that it's worth all this, or does it? I understand it hasn't been hacked yet. So I think for me, the fact that it hasn't been hacked and it's a store of value is a miracle. The fact that there's $1 trillion on a computer network owned by nobody.
That's what the busy work that these people are doing. That's what you think there are people that aren't trying to steal this money.
Amazing. Like, shouldn't have been hacked. Like, aren't there Russians?
A lot of it's been hacked. I mean, Bitcoin, the thing that, never has been stolen or compromised.
Well,
or
it's
lost.
been stolen on the ends, but I'm talking about the network itself.
Yeah,
is
the
not
system.
The integrity of the system. Yeah.
The integrity of the system with $1 trillion at stake now, you would think that some state-sponsored actor, China, Russia, pick a person who's got resources. They must be trying like heck to figure out a way to siphon off this value. And
of course they
maybe
are.
They're doing it in some ways. I don't know.
No, we'd know if they were.
Here's the thing about zero-day exploits. Either they would have done it already, or they perceive it to be way more valuable in the future. And so
you're saying there could be a 0-day exploit in Bitcoin?
Sure. I mean, there could be a 0-day exploit in iOS.
But it's all open source, right? It's all, the code base is all known.
Why does that make, that means a lot of people have looked over it and no one's caught a bug, but like absolutely someone could have a 0-day vulnerability exploited and they're just deciding how to burn
That's
it.
fascinating. Then they would also be long Bitcoin. They'd be betting on it being worth more in the future. So as long as the hackers are long, we should be long too.
Maybe they put that 0 in there and they know this is another conspiracy there. What if there is an exploit in there that lets them predict where it's going or have some back-end control of it so they could make it go down, buy, make it go up, sell, make it go down, buy, make it go up, sell. And they could just keep pumping and dumping in some way. This is a crazy
somebody's paying for order flow in Bitcoin. No, too soon.
Exactly. No, there could be some weird bug in there. It is completely crazy. And I mean, the hardest part about this is having to listen to Pomp and all these other people be insufferable that it's going to 250K. And I have exposure to this.
Have you had the Winklevoss twins on the show?
No, please God.
Oh,
no.
You got to have them on. Oh, they're very
brutal.
compelling.
They're brutal. It's hard to like just even look at them without seeing the social network. And you've had them on the show?
No, but we talked about them a bunch in this episode. Did you know that
they dopey? I think they seem dopey.
They're so smart. They took
really?
Facebook settlement in stock. Everybody was like, take the cash, take the cash, take the cash.
All right,
they took it in stock.
Smart.
They turned.
That's got to burn. That's got to burn.
Oh, for sure.
Zuckerberg like crazy that they still own stock
like 45 million in equity, turned that into 300 million in the IPO, put a whole bunch of that in Bitcoin, and made like several billion.
They're savvy at least. I just find them insufferable. It's really the fact that there's two of them and they're really tall. That's the thing I find insufferable. It's like two centers from the end. It would be like if there was two Shaquille O'Neal.
They were genetically engineered.
Olympians and they're amazing investors with a track record. Like
it's too much. The whole thing is too much for me. So let's just put it at this. When we look at the bubble, somebody is going to get tagged here. So it looks like Elon bought 1.5 billion through Coinbase.
Wait, through Coinbase?
Yeah, Coinbase Prime Brokerage.
Coinbase has a primary, like they have a VIP program where I guess they work with people to build large positions. They did it in a week for him, according to a headline I read.
Yeah, it's a prime brokerage, just like a prime brokerage that a bank would have.
And it only took him a week to build the $1.5 billion position.
That was the thing I found fascinating. So I think what probably happened was they said, listen, we've got a buyer here who wants to buy a big chunk. That's good for everybody. Do people want to let this person in to the club? Or maybe they just, maybe that's why it went from 35 to 50 or when it went from 30 to 40 was that buying going on. They've made 600 million now in profits.
Wild.
I mean, the way Tesla's
Jason, it's a treasury asset. Like it's like we in some ways we should say, oh, look at all this profit that they're making, but like that's not the goal there. At least you would hope that that's not what sort of the CFO of Tesla is looking at this as. This is like a store of value, not an investment.
Well, I mean, if he chipped off 100 million a quarter and put it into building gigafactories, he would be taking virtual imaginary money and making a real world factory out of it. Do you have a business that accepts purchases or orders online? I bet you do. You're listening to This Week in Startups. And if so, have you ever had a digital transaction not go through? Of course, the answer is yes. So that's called a false decline in the industry. That's an industry term, a false decline. And this is what happens when an online purchase is declined when it should have been accepted. How frustrating is that? You're right there. You have the ability. It's a layup. You're going to put the ball in the basket, but no, you missed the shot. And this is often the result of technical, financial, or fraud scoring reasons. Well, last year, wait for this, US, UK, French, and German false declines were over 20 billion with a B dollars, according to our friends at checkout.com. Go visit checkout.com and you will see how you can resolve this issue. It's a total no-brainer. Here's my associate Presh doing a free test account at checkout.com/twist. So if you go to checkout.com/twist, they're going to give you a free account and you get to see Checkout's amazing dashboard. And see here how easy it is to deploy a checkout.com payment gateway onto, let's say, a Squarespace website, a beautiful Squarespace website. There it is. Boom. Checkout is crucial for growing companies. They're going to allow you to get that granular understanding of how cash flows in and out of your business And they're trusted by brands like Samsung and Adidas and many more. Go ahead and check out checkout.com/twist. I guess the question here at the end of the day is, when we look at the overall stock market, when you look at the stimulus that's been pumped in, when you look at people having these huge treasuries, are we able to say definitively that we're in a bubble in terms of the cycle, right? We had a down market in 2008 all the way to now. We had this little crazy blip during the start of the pandemic that very quickly recovered. So I guess we had a crash, but it recovered so quickly.
I remember calling for a bubble in 2015, and we're still on that same bull run.
I'm actually super curious. Well, Will, if you want us to answer the question, we won't back out and answer the question, but I'm very curious. I want to know your opinion you've lived through a bunch of cycles.
This feels bubbly to me when people are doing irrational things. So that, for me, is the sign. When people think they can't lose, that's when I get worried. So when people are just not thinking about their bets or not using judgment. So I'll give a couple examples that made me nervous previously. During the dot-com era, I was filling my gas tank, and the person recognized me from the magazine who was literally pumping my gas and was talking about his pets.com and eToys and other stock money that he was making and that he wanted to start a company. And I just thought, well, it's great that things are democratized, but this is a little bit weird that the guy pumping gas is also trading these stocks. So I do get a little concerned about the stonks effect, which I would parallel those two. And then people not questioning valuations in the private market. I've seen that happen a number of times. That also gets weird. So, having a company that, and you've probably had this experience right now, and you see it in VC wild culture on Twitter, where people are talking about their markups. So I'm watching first-time fund managers talk about their 5X, 4X. I wouldn't say the name of the woman.
Jason, they're fundraising.
Anyway, there's a woman who is effervescent on Twitter. I wouldn't say her name because.
Oh, wait. We gotta. I haven't. If it's come out, I haven't seen it. We gotta put this to rest. All right, Jason, are you the mad genius behind VC Brags?
No, of course not. Of course not. No. I mean, they basically have been DMing me since the beginning, thanking me for having a sense of humor when they made fun of me.
Oh, it's so good. I
loved it. I was like, this is the greatest marketing ever. So I was loving the marketing, but watching people who are first-time fund managers talk about their markups, and then, I'm friends with Bill Gurley on the other side, and, I'm playing cards with Bill and, having a heart-to-heart with him. And he's like, well, you can't eat, those unrealized gains. Like, that's just, it's not going to put food on the table.
When I'm still a whippersnapper, but as a real whippersnapper, we met through the Rover and Dog Vacay merger and all that. He told me once, he's like, yeah, it's real easy to write the checks in venture, real hard to cash the checks.
I mean, and so that's where I'm getting nervous. And then sometimes I see a company that we passed on investing at a $20 million valuation because they had $500K in revenue. And I was like, you know what? 40 times revenue, this doesn't seem like something that works for me because I do want to be able to exit and get a return for people. So we'll pass. And I had to stop telling people we're passing based on valuation because it was creating too many bad feelings with the Y Combinator cohorts who were just really running up their valuations and it made no logical sense. And so that is another thing that gets my blinking warning light going off is I'm watching other VC funds put money into Clubhouse at $1 billion with 5 million downloads. Now, listen, I know it's a breakout, but they're paying $200.
We came on your show when they raised at $100 million valuation. Like, I think that
didn't make sense either. I mean, I would have made that bet. I would have made the bet at 100, but that didn't make much sense either.
But does it make sense now?
At $1 billion, it makes no sense.
Do you think the company's worth $100 million now?
Well, let's just talk logically. 5 million people using it, or 5 million downloads was the last I heard. But it might be growing. We don't know the growth rate. So if the 5 million number that got quoted last month is now 20 million, and it's doubling every month, I don't know, who knows what the doubling rate is, but let's just say it gets to, in order to be worth, what is a Facebook user valued at? Facebook has 3 billion users and they're valued at $1 billion.
Yeah, let's see.
700-800 million, I think, or billion.
Yeah, so they're valued.
I know their US users are super valuable. Their US users are like over $100 a year.
I think. Yeah.
Yeah. Yeah. Facebook is 3 billion users, and let's make it easy. Let's say they're 900 billion market cap, which is they're a little less, but then that would be $300 a user, right?
3 billion times 900 is $30 a user. You're right.
Yeah,
$30 a user. So
wait, no, I think it's 300.
300?
There's 3 billion users and 900 billion market cap. It's a little less.
Oh, they're not over $1 trillion yet. Got it. Okay.
Yeah.
3 billion.
It's all billions, so I think you just divide 900 by 3.
$300.
Okay. I do know that Facebook's US ARPU is $147 a year.
Damn.
Internationally, it's like an order of magnitude less, but I do think Clubhouse is mostly domestic. So would you value Clubhouse users at $150 a year? I mean, there's zero ad load, so it's all about potential future value.
Yeah, I mean, potentially, if people paid $10, if some people paid for a pro account for $10 a month, it could be. If they have
come on, these are just strategic valuations, though.
Right.
Like this is people are playing. I mean, like look at Snap, right, or Twitter. Like it's super hard to build the monetization on the engine on the back end of a social network. Like there's value in the users. There's a lot of value for sure.
If they could monetize them. Right.
Yeah, there's really only 2 organizations that have built attention-based monetization advertising systems at scale, Facebook and Google. Nobody else has done it at scale.
So let's assume they do it. And they have 20 million people right now. And let's say they get to $100 a person. Is it possible?
Yeah. It's sort of a silly way. This is the wrong way to value this company, or at least to answer the question, is $1 billion high or low? The answer is $1 billion is either way too high or way too low. We don't know which yet. It might be way too high and the whole thing goes bust and they never figure out how to, like, really, they're going to get $1 billion of future cash flows out of this thing? That may never happen. But it could also be
Let's
too
answer
low.
that when we get back. How would you monetize Clubhouse in order to fill in the valuation and make the investment decision? If you did have the opportunity, let's phrase the question straight. If we all had the opportunity to invest at the $1 billion, how would we justify it in terms of the business model, and what business model will we need to see deployed in revenue to make that happen when we get back on This Week in Startups? Do you ever wish you invested early in some of the best performing IPOs of 2019 and 2020? Well, OurCrowd investors did invest early in many of those awesome IPOs. With OurCrowd, accredited investors can invest directly and easily in startups early before they IPO or get bought. OurCrowd investors have benefited from companies IPOing like Beyond Meat, what an amazing company. And some of the companies have been acquired by buyers like Intel, Nike, Microsoft, and Oracle. Accredited investors can participate in single company deals for as little as $10,000 or one of OurCrowd's funds for as little as $50,000. Today, you can join OurCrowd's investment in Nano Lock Security, Nano Lock Security, a company that is offering IoT cyber protection, including billions of low-end devices that other technologies cannot protect. NanoLock is the only device-level protection that has both near-zero power requirements and is operating system agnostic. I recently wet my beak and placed a little bet there on Cyabra, which is a company that uses AI to uncover disinformation and expose fake news on social media. I made a little investment through OurCrowd, easy breezy, and you can evaluate these deals for free just by opening an OurCrowd account. You go to OurCrowd.com/twist, OurCrowd.com/twist. Very easy, and you'll get in early on NanoLock or other unique opportunities at OurCrowd.com/twist. All right, welcome back to This Week in Startups. The Acquired FM boys are here, Ben and David. Go to acquired.fm, and there's $100 you can spend on the LP show, and where they go super in depth, and they're going into debt doing it. It's just causing them, it's just really expensive to produce. They're losing money on it. So please subscribe for $100 and help them stem the losses. But it's really, really a great
Talking
product.
to the internet is there's so much marginal cost in there.
All right. If there was a revenue model, what would the revenue model be, David? Advertising, subscription, merch. I mean,
well, I mean, I think that both
virtual currency.
I think you got to do. I think you do what Twitch is doing. Of advertising is probably the biggest. Look, traditional media. We just did a 3-hour episode of the New York Times. We do tons of media businesses. Like media businesses, the rule of thumb is you make 2/3 to 3/4 of your money from advertising, and 1/3 to 1/4 from circulation, subscription, whatever you want to call it. That's what they should do here. I think that's what Twitch does. Make a lot of money from advertising, and then you got tipping and subscription to individual channels.
What would ads even be like on Clubhouse? Would it be like when I go into a room, it plays an ad first before I'm allowed to go in? That would be super annoying.
I don't think they should start with ads. I think the first experiment I would run is around something like Twitch Bits, have a virtual currency system that you in-app purchase to pay into, and then you can allocate those among creators. It's almost like you could do medium claps, but the people actually get money out of them. So you could imagine someone, going on a diatribe or a monologue or however you want to phrase it, and the room, compensating them for making a really great point.
And they take a spread on that. They take 30% of it.
Just like Roblox, just like Twitch. Yeah.
You should also they should also do paid subscription rooms, just like we have a paid subscription podcast, the LP show.
That would be very interesting. I've heard Paul talk about like, hey, if Kevin Hart wanted to do a show, he could have 1,000 fans for $20, make $20,000 sitting in his backyard, just riffing new material. Or Chappelle does it for $100, gets 1,000 people, makes $100,000.
Yeah.
Never has to turn their camera on. Never has to go to makeup. Just like literally in the hot tub.
You pay to go to the comedy club, and they split that with the performers. Same deal here.
But look, we got into this conversation because of valuation. I just want to make the point that like any sort of multiple of current users or valuing it based on, hey, well, this other social network is able to make X dollars off of them. So with this current user number, or trying to do anything that even looks remotely like a discounted cash flow, the right way to value this is say, oh my gosh, this is one of the rare set of opportunities to create the next Facebook, Google type company. We now know that the market caps of those companies can be in the $2 trillion range. And so you just say like, wow, this is my chance to get a rare ticket onto one of these. This company's growing as fast as Facebook was in its early days. And companies don't do that. And so like, it's already hitting that escape velocity thing. And you're just making a bet that the founders are going to figure out how to retain and do monetization well. But it's like let
me ask a crazy question. You guys think, have you seen Twitter Spaces pop up in your top app yet?
I have.
Okay. And have you seen it, David?
I have not, no.
Okay. I've seen it, and I'm seeing it now every day. I see it 50% of the time. And today, for the first time, I saw 2 or 3 going on at the same time. I also talked to the Twitter Spaces person by DM, and they're going to put me on it. But they specifically said, we want to put you on it. You're on our list, but you have 400,000 followers. We're limiting it to people with like under 200 or something because they don't want to break it. But I looked at it, and I have to say it's much more compelling to be on Twitter.
Yeah, I agree.
And then when the real dynamic that's incredible is you click on somebody's profile, you go to their profile, and it minimizes the audio to the bottom. And then I'm reading your tweets. And then I go to my replies, and I'm looking at my replies and trending topics and doom scrolling while listening.
Are you still doom scrolling post-Trump?
A little bit.
We're still in COVID.
You know what? I kind of delight scroll now. I delight scroll, like watching the impeachment and watching Biden do 2.2 million shots in a day. I've given up doom scrolling. I just delight scroll all night.
All right. So Jason, all that behavior that you just described is literally exactly what I do on Clubhouse. The app still works great in the background. The only thing that's hard is for me to take myself off of mute. I will say the way that I've thought about the delineation between Clubhouse and Twitter Spaces right now is for Twitter Spaces, it is only in the top bar for the people who are following me. So it is an opportunity to have a real-time live audio discussion with people that are already in my top of funnel as a creator. When you're on Clubhouse, there's way more opportunity to get exposure to people who aren't already in your ecosystem. So to me right now, at least, and if Twitter stays with the same mechanic, then Clubhouse will actually be a much better place to go and cultivate more exposure, whereas Twitter will be a better place to sort of deepen an existing relationship.
Yeah, it's going to be interesting because I love the feature of Twitter now where I could say people I mention or people I follow can reply to certain tweets. And I use that sometimes when I just don't want to deal with trolls and whatnot. And I think that's going to be the powerful one. I want to be able to set up a room and say, people I follow can join this, or people who follow me already can join this. And I think that's going to be really powerful. But I would not go over to Clubhouse, I don't think, if Twitter was working, because I've already got an at-scale network over here. So I think that's going to be really interesting what the competitors do. I still think Clubhouse wins as the dedicated one. But if you look at stories, there's many more stories being consumed and shared on Facebook and Instagram than on Snapchat, the originator of that idea.
Yep.
Is that true?
So-
I assume it's true, yeah.
Yeah,
Just because Instagram has such a broader reach. I mean, it ultimately was a grow the pie thing. It was a win-win for everyone because Snapchat's doing better than ever. Instagram, I mean, it provided the new growth engine for Instagram when they were starting to taper off.
But still,
One is
Could be true here too.
I mean, my point is now with these at-scale services, the at-scale service can duplicate it and beat the original. I think is the kind of thing. The other thing
as
I
a
noticed,
creator, right? Like your biggest fear. I mean, like Facebook played this out for everybody. Everybody lives in fear of like, oh, I go on a platform, I create an audience, and then you gate me from my audience. Like, if you feel confident you've built a 400,000 person following on Twitter, you know, you feel pretty good. Twitter's not going to algorithmically gate you from them. You're still going to be able to reach them. You don't know what Clubhouse is going to do.
That's the key, because I got blocked on Clubhouse because I sent a bunch of people to report these MLM scammers. And I was like, here's all these people selling
that's
coaching.
a crazy sub story on Clubhouse too, of like all the MLM stuff.
Oh my God. It's so weird. Have you been in one of those rooms and listened to these people? Like JT Fox? I don't want to mention names, but there's like a JT Fox character who, if you type JT Fox scam or JT Fox reviews, he's kind of like I don't know. Somebody said to me, he was like a poor man's Tony Robbins or something. And they sell these coaching things and they have these crazy bios. And they were doing all of this like really hardcore coaching or telling people they were going to get 7 or 8 figures. And then all these people reported back to me that they charge $10,000 to $20,000. I don't know if JT does or other people do, to be in a coaching session with them for 10 weeks or something on Facebook.
This is like all those people that make money by teaching you how to run a really good Amazon third-party seller business. And
basically, yes.
Yeah, or how to start a Shopify site, and then, yeah.
It's the same, and they're like, I've started 200 7-figure, 8-figure, 9-figure businesses. So I went on stage, and they called me up, and I said, which one of those businesses can we look at right now and use? And they're like, oh, there's so many. I was like, well, which one's the number one that's made the most money or you're most proud of? And they kicked me out of the room. So then I came back to the room, and MC Hammer was there, and he's friendly with me, and he put me back on the stage. I said, and the woman's like, well, here's how you do it. You do an $8,000 course, but then you tell people when you're on the phone with them that you'll give it to them for $4,000. And then you tell them as long as they tell their friends about it and give you a testimonial, and then you build trust with them. And she was literally teaching people how to convince people to take courses on creating more courses. It was really weird, dude.
That's really where the money is.
It's turtles all the way down.
It's basically turtles all the way down.
Wait, can we, so wait, we got to Clubhouse because we were talking about bubbles, and we got to bubbles because we were talking about Bitcoin. Can I pop us back up a little bit?
Yeah, pop us back up a level.
All right. So I think you were originally asking the question around tell me about this Bitcoin bubble. Elon and everyone just piled in. Are they going to have the bottom drop out on them? And we started talking about this macroeconomic.
That's an interesting question I didn't even consider, Ben.
Oh, well, then I misinterpreted it in the first place. But I do
you made a point that's really interesting, Ben. What happens to Tesla if Bitcoin goes back down to 5,000 and they lose whatever that is, 80% of the bet, and they lose $1 billion?
Yeah. Well, the first thing to know is that Tesla raised $12 billion in equity offerings last year. They did 3 different, effectively, they're like IPOs. They basically said, hey, you can buy a bunch of new stock today, not from existing shareholders, but you can buy them from us, the company.
And the price went up each time.
Create more shares,
which actually makes sense. I would defend that, but yeah.
So, okay, there's this great, Jason, I'll link you so you can put this up here. There's this great graph that Bloomberg did of equity offerings done by Tesla over the years. Basically always sort of 0 billion, 1 billion, maybe 2 billion. And then in 2020, they did $12 billion of equity offerings. So, of course, they should do that because people were bidding up their stock. They now have this, you could call it overpriced, you could call it very highly valued currency in their stock.
Fully valued is the term of art, I think now. Fully valued. When you go on CNBC, you can say the market is fully valued.
That's great. I'll take an intro to CNBC whenever you're ready, and I will tell them how fully valued GME is. So 2020, they do the responsible thing that you should do as a CEO with fiduciary responsibility. They are like, hey, this is a great fundraising opportunity. Our stock is really high, that we should do this. So they do it. They get 12 billion of cash on the balance sheet. It's now up closer to 20 billion because the business it's great. It's making money. And so of course they put some of that in Bitcoin. So in some ways, it's like, well, if it all, I'm not going to quite make the argument that like, oh, it's all house money anyway. So if it all goes to zero, it all goes to zero. But it is Bitcoin that has been bought by very shortly after converted equity value from the company, which is sort of, it's like you kind of have to wrap your mind around that. But I don't think, I mean, we're at this point where it feels like enough institutions, enough financial institutions, public companies, Square, Cash, there's insurance companies that are doing it, are plowing into Bitcoin, where you're not looking around and seeing like a bunch of internet cowboys looking at you and being like, yeah, Bitcoin. You're seeing like robust financial institutions looking at you and being like, we are participating in this monetary ecosystem. And so sure, the price is going to go down, maybe dramatically, but there's enough sort of stability to find a relatively high bottom at this point, or at least that's sort of how I think about it, because there's a bunch of institutional sort of like support. That's a great way to put it.
Yeah. I mean, I think that was the thing that when I saw Elon buy that big position, I was like, even if I didn't believe in it before, there's a certain manifest destiny here where if enough people buy into this, it is that. But now he could also clear his position.
That's what currency is, baby.
Yeah. But what if he clears his position? He decides, you know what? I'm just going to take the profits and I want to be in US currency again. Then what happens?
Because Lord knows they moved the market. You know, they piled in by the time they announced they're already up 600 million.
So David, should we all put our money in Bitcoin? Yes or no? Go ahead, David.
Should we all
put our money?
Let
me ask you a question,
yes.
David. Here's how I'll phrase it.
We should all have some exposure to Bitcoin.
Everybody should have some exposure.
Yes.
If a sibling came to you, and let's just say, or a cousin, whatever, they're just a blue collar average person, you know, they got two kids, a mortgage, whatever. And they say, you know, I got $100K in my 401k. I got, you know, $200,000 or $300K in the house. So I put my net worth at $500,000. I want to put $50K into Bitcoin, 10%. Do you say, what do you say?
Wait, it's 50K of net worth is $500,000, but liquidity of $100K.
What do you say to them? They say, I love crypto.
I would say that's like maybe at the edge of okay, but I think that's okay.
Wow.
For what's worth, not investment advice. Personally, I have about 15% of my net worth in mostly Bitcoin, some Ether, a couple small positions in other crypto.
What would you do, Ben, in the same situation? Your cousin, brother, sister, uncle comes to you and says, I want to put 10% of my net worth in this.
That level of exposure feels a little high to me, but what I would definitely say is divide it into 5 chunks. You want to put 50K in? Great. Put 10K into 10 different piles in your mental buckets, and then wait for Bitcoin to drop a certain amount, like dollar cost average it in. So every time the value of Bitcoin falls 5%, go buy 2K or 10K, you know, and think about, you know, buying mini dips along the way, and you may get screwed and, you know, it may be at 100K by the time you put your 5th tranche in, but you may also save yourself a huge headache and sort of danger on the way down.
That's the thing I'm wondering here is, does this have escape velocity now like Clubhouse? And does it ever go back down, right?
Could.
Because now these guys are saying 250, 500K. And I'm like, that doesn't make any sense. But I didn't, when it was trading at 3 or 4, 5,000, I was like, be careful, people. Like, this could go to zero.
It's greed versus fear, baby. I mean, it's like, fear happens fast, and appetite for risk evaporates very quickly. And so, you know, I think, where the early people who were piling in, if it starts plummeting, might look at it and go, oh my God, I gotta realize my gains. I gotta get my money out, which of course causes the theoretical bank run. The later players that are in are institutional. I mean, they're in it for a long term. They have a thesis. There's a
they're hedging against cash blocks. In a way, right? Like they think cash is going to go down.
How I would advise a non-tech savvy relative. I think the first question before you decide on percentage allocation is, what are your forecasted liquidity needs for the next X number of years?
Don't need anything for 20 years. You know, I'm 40 years old.
Then that's a case.
I'm retiring in 25. I need a little bit for my kids' college, but not.
10, 15, 20%. Sounds great.
We have, for the first time, a new feature. This new feature we're going to do is called Mount Rushmore of Tech CEOs. And we're doing this in a snake draft. I don't play fantasy football, but I do know what makes for a great CEO of a tech company. We are going to pick our Mount Rushmores, but we're doing it based upon a snake draft. What that means is David gets to go first. We did this according to net worth. David's going to go first.
We did it according to allocation into Bitcoin.
Assets under management. So David goes. I'm joking. I'm not joking.
Love it.
So anyway, David's going to pick first.
We're doing reverse assets under management.
Here we go. Yes. So David is first, then Ben, and then JCal goes as the third pick. But because it's a snake draft, first is David, second is Ben, third is JCal, fourth is JCal, fifth is Ben, sixth is David. So David gets the first and sixth, I get the third and fourth, Ben gets the second and the fifth. So theoretically, this should equal out. So David, we have a list, and then when we get to our Mount Rushmores, we're going to let the audience decide who picked the best four, who's got the best Mount Rushmore. Whoever wins is going to get a Cybertruck. Okay, here we go.
Oh, yeah.
You're not just picking Ben on market cap. I know how Ben thinks. If it's already big, it's going to get bigger. There's no bubble. Everything goes up. Stonks go up. Bitcoin goes up. Ben's just
momentum trading all day long.
All day long. You're going to pick from the GOATs. And not only are you going to pick from the GOATs, we also have a pool of candidates who would be best described as the next generation or the up-and-comers. So we have a list here.
While Jason's pulling up his list, I think we need to discuss, agree as a group on what the criteria are for like our, because I think that I could think of three different criteria to qualify for being on Mount Rushmore.
Most want to invest in?
Well, so I was thinking most want to invest in, like, how good are you as a capital allocator?
Okay.
I'm invested in you. I feel good that you're going to compound my capital over a long period of time.
Got it. Okay, that's one. Are we going to keep this in the show? We're going to keep this in the show, right? Our debate.
I sure hope so.
This is
sure.
Keep this in the show. Okay, so
how are people going to grade our performance?
Yeah. So you believe, David, how good they are. If you were going to give them $1 billion, would they deploy it and get a great return? I like that. That's a good way to do it. Okay.
Will you get me 30% plus IRRs over a decade plus?
Love it.
Okay. That's one. Second criteria, completely different. Would you want to work for them? There may even be some anti-correlation there.
And then you went with culture.
Yeah. Like, how good a leader are you?
Okay. Yeah. People want to work for you. Okay. Talent, that they draw talent. Okay. So we got the scoreboard. On returns, we got, are they a great culture leader? Do people want to work for them? Okay.
And I think maybe I would submit for consideration by the group a third criteria, which is how good for society / the world is.
Oh my Lord.
What they're doing.
Jesus,
boring.
Who cares about that? We just
okay, screw that. We're talking about Mount Rushmore here.
Weaker and weaker. It's like scoreboard. Then how good do they make the players around them? And then how good are they for society?
It's just a very different. I love the third. It's just a very different. Like, I don't know how to factor. I don't know how you weight these things. Because they in some ways run.
We're literally talking about carving faces in stone here. You gotta wait.
That's true.
Okay, we could kill number 3.
General one. Ben, do you have anything you would tweak about that?
No, Rosenthal's good at these criteria. He came up with the ones for our best acquisitions of all time, and that was good.
All right,
it's a good set.
I like it. I think I can go with it. I think I can roll with that. I mean, I do think another one is if you put them in charge of another famous company, how would they do with it? So, if you were going to put them in charge of Disney,
translatable performance,
or Amazon, who would run it better than Cook, Iger, or Bezos?
There's been a bunch of studies done on this. I can't remember what book it was in, but one of the sort of hot
good to great, books, built to last kind of thing.
Where and they tested it outside of tech too. That one of the examples was so you take a surgeon out of an ER and you put them in a different hospital's ER, and they go from 0 fatalities over 5 years to 10 fatalities that year.
Really?
And all investment banking was another one. You take even this IC analyst and you move them to a different team, even though it's a pretty individual sport, and way worse. So it's I think people always overestimate how transferable talent is between organizations.
All right, here we go. So we're going to pick from the GOAT pool, 2 from the GOAT, and then 2 from the futures pool. Futures being people we think will be incredible going forward. Goats being they've already established themselves. You can,
Great.
but you don't have to do 2 and then 2. You could do 1, 1, 1, 1,
yeah.
or 2, 2. You pick how you want to go. So there was a little strategy here. David,
I love this.
pick your first
All right.
choice.
I'm going first. Non-surprising, non-controversial, but I totally believe it. The recently retired Jeff Bezos.
God.
Taking him
Damn.
with my
This is
first
so
pick.
obvious.
He's the LeBron. He's the LeBron or the
Amazing.
Jordan.
All right.
Well, you said or the Jordan.
Yeah.
So
okay,
that means
maybe
there's
both.
two.
Interesting.
Well,
Okay.
what do you think,
that-
Ben? You're up next.
You're up next.
It's
It's a tough one.
a tough one.
Remember, I picked 2.
I'm going to go and I'm going to steal David's number 2 because he stole my number 1. And I'm going to go Pony Ma from Tencent.
Damn it.
Wow. That is kind of, explain your thinking there.
Tencent is an absolute juggernaut. And it is not just because they are the owner of WeChat that has 1.2 billion users. They are invested in like every successful Chinese sort of unicorn next generation company. Not every, but a tremendous amount, like 5 to 10% positions in these companies. And tons of US companies, Tesla, Riot Games, David, what am I
Games.
missing here? Epic.
Snap.
Yeah.
Certainly by
Okay,
criteria
I like
number
it.
1 of capital allocation.
It's a pretty crazy one. Now I get to pick 2. This gets really interesting here because I could just take the top 2 of the futures pool right off the table right now.
You could, but will you?
However, this is a pretty easy decision for me. Looking at it, as great as Larry Page did and as much success as Zuckerberg had, Zuckerberg, I think, is on the downward trajectory, and I don't think he ever made anything in his life that was unique to him. I don't think he's a creator. I think he's a thief. I think he's good at copying shit. So I would never include him in my Mount Rushmore. I think he's a disgraziad. Larry Page is brilliant, but he got out of the game. Where's Larry Page? Nobody knows where Larry Page is.
Could argue, though, that
Those
was
guys-
brilliant.
Right.
That
He's not
He
in front
sent
of
Sundar
Congress,
to go
which is awesome.
deal with Congress. Yeah.
That's brilliant, but I don't think these guys are in the game. Now, Bob Iger, we both know, did a great job pulling together the Disney assets, but he's a suit who did a good shepherding. What I think is important is your ability to make transcendent products in the world. And the huge mistake that you guys made is that you left. And this is why I'm going to win the Mount Rushmore. It's because you too got cute. You got cute. You picked Bezos, an obvious choice.
Yeah, I know where you're
But
going.
he's out of the game. And then you went with a wild card, Ben. And you didn't know I was going to pick up 2. And I am picking up Steve Jobs, who made the most beautiful product in the history of all products, the iPhone. Literally, the most important product in humanity in the last 100 years is the iPhone. And
Amen.
you too got cute and you did not give Steve Jobs proper respect. And he's on my Mount Rushmore now. And boy, do you two look silly. Because now I'm taking Elon Musk off the table, who is not
modern
50
son.
years
dagger.
old yet. He's not even 50. And
He's in the goat
he
and the
is
futures.
a worker. So you guys got cute. You thought you know, use your little chess moves, try to pin me down with a little bishop, queen pin. And then you left. You left for me. Musk and Jobs. This is like me taking Steph Curry ahead of the Knicks at number 7. I now have on my Mount Rushmore, on either side, Steve Jobs and Elon Musk. Please try and catch up.
You got the Splash Brothers. Oh, that Musk pick, that hurts. That hurts.
Go ahead, Ben. See if you can salvage your Mount Rushmore, which is crumbling before our very eyes.
One thing on
How
Musk
do you
before
prop
we-
it up?
We gotta give credit to Musk. Not only Tesla, not only SpaceX, PayPal too. Like this guy has hit
Come
the
on, man.
trifecta, and he's
Come
not
on,
even
man.
50 years
And
old.
what if Boring Company or the thing in your brain works? I mean, Jesus, come on. And what if Starlink spins out and becomes worth $100 billion? I mean, that's a possibility too.
Ooh, it should not spin out, but it is an amazing business line.
Okay, boys. Right now, you're feeling pretty dejected and defeated. Go ahead, Ben. See if you can salvage your Mount Rushmore.
You got 2 picks in a row. You can't just sit here with us each having only 1 pick on our Rushmore.
You could have picked either of those two. You could have taken those off the board, and you didn't.
So you're saying if you had the next 20 years to bet on, you don't think it's wise to bet on China?
Listen, we're talking about Mount Rushmore here. You're right now all of a sudden regretting your life decisions, Ben, and you have the next pick. You're on the clock.
All right.
So let's just see if you can salvage this, because I like a wild card. The crowd went crazy when you picked that wild card. We just don't know if that's going to make you lose the Cybertruck. Which right now I'm thinking about putting the Cybertruck on because I just ran the table on YouTube.
All right.
Come on, boys. Try to salvage this. Go ahead, Ben.
So I'm a little bit afraid that your audience, like me, is too young to have seen the dominance of this CEO in his heyday. Okay. But I'm picking Bill Gates.
Of course.
And I don't just want to talk about, the fact that, Microsoft has become top 3 most valuable companies in the world, or the fact that not only did he make over $100 billion personally, that he's giving it all away. I think the thing that is important to talk about here is the discovery. I don't know if it's an invention or a discovery of the greatest business model in the world, which is software. Like
platforms.
I think that had Bill Gates weathered the internet, he would have been my number 1 pick. But he didn't. I mean, software over the internet is the true best business model of all time. But the world's riches were flown in on 747s to Redmond, Washington to buy copies of Windows and Office for decades.
Unbelievable. Yeah.
I mean, truly, truly pioneering.
David, we have to give him some props because you said also good for humanity. I think we have to take his philanthropic efforts and we have to put him equally up there. So it does make the Bezos selection and the Bill Gates selections even more powerful, because what if they do in the nonprofit sector if Bezos does what Bill Gates did? Because I mean, if you were to argue, Ben, Gates's post-Microsoft impact on the world versus during Microsoft, that's got to be a jump ball now, right?
I think his impact on the world is greater with the foundation. Yeah.
All right. This is getting a little heated here.
I think Bezos is the book is not done on Bezos. I think either at Amazon or in the rest of his life.
Oh, you think he could come back? You think it's a round trip?
Oh, no, I don't think he comes back as a CEO. I think he will just continue to exert influence on Amazon.
He's taking a break.
He still owns like 20% of the company. Or 10% after his divorce.
What if Bezos is taking a break? What if he's just burnt out and wants to take a 5-year sabbatical? What if he comes back at 62? I never thought about it. Has anybody ever brought that up, Ben? The possibility that he would come back?
Are you saying come back to Amazon or come back with something new?
I didn't even think about him starting Amazon 2.0 or starting another company and being an entrepreneur. That's crazy to even think about.
Yeah, it's hard to imagine he would be an entrepreneur again. I mean, I think he's going to pile in
kind of hard to do, right? Yeah.
But maybe with his focus on Blue, I mean, you could imagine Blue Origin becoming a
SpaceX contemporary.
Yeah,
David, you're back on the clock here.
And I have 2 picks this time.
Now you've got a strong anchor in Jeff Bezos. Are you going to go with the GOATs, or are you going to go with the futures pool now? Because this is a really
I'm
good decision.
I'm tempted by the futures pool here.
I know. I can tell. I'm watching you scan down on the Notion page. I see you're looking down, not up.
I know.
You're probably scrolling down right now, looking at Toby from Shopify or Daniel Ek from Spotify.
All right, I'm going to be controversial. This has gotten a little tense. I'm going to ratchet it up a little bit here.
Uh-oh.
Here we go.
Okay.
Taking Chamath with my second pick. I'm taking him off the board.
You're taking my
taking your bestie.
You took my bestie? Oh.
You just came at us so hard with Jobs and Elon there.
I wanted to introduce a rule that he wasn't allowed to take Chamath, so I'm glad you took him off the table before I had to introduce that.
I was going to be my little chip there, getting Chamath on my wall. So now you got Chamath.
Now, partially, of course, to tweak Jason is why I did that. But
it was pretty good.
But, look, Chamath.
David's back on the clock for a double.
We can't, his calls, you can't argue with the track record over the past 10 years.
Track record's so strong. Yeah. And he's so young. I mean, he's not 50 yet either.
I mean,
and
look
clearly,
at David, you get to pick a second one. You're doubled up here.
Okay.
Wait. While we're on the Chamath subject, Jason, this is probably a pretty good time for us to say, David and I were talking about this beforehand. You have built something awesome in All In. Like I get so much entertainment and like
100%.
true value out of listening. Like from the minute the theme song hits all the way till the end, it is like it's amazing.
When the theme song comes back in, that's just it's so good. Honestly, it's my favorite podcast right now. Like you guys are crushing it.
Boys,
we know how hard it is in this game. Like
Spielberg. Shout out young Spielberg.
Can't give you enough props. You guys are
thanks.
Doing great.
I don't know what you guys thought of the GME episode. I'm sorry, the Vlad episode, but it was very polarizing. And I have to say, it literally, the drama. I'm going to say this.
Wait, the episode where you were just hyping your own book the whole time, or no?
Well, I mean, I'm defending my guy, which of course is my role. But I thought I laid back.
I get the sense loyalty is important.
They didn't want to go for the jugular. People wanted blood, right? Like I think literally the GME Wall Street Bets people wanted Chamath to say you should go to jail to him. And I think it's very hard to do that on the phone with somebody when you're interviewing them. And I don't know if interviews are the right thing for us to do on the pod. I'll be totally honest.
Although Draymond was great.
Yeah. The surprise call-in is pretty good.
Yeah.
Okay.
You could go with call-ins, but not like hard-hitting interviews.
And we can tell you too, as a dual co-host team, it's hard for us to interview one person. I can't imagine 4 people trying to.
It doesn't work.
It gets crowded.
Yeah. So anyway, that was the big debate to go behind the scenes. But thank you for that. It's
yeah. I think honestly, just like the 4 of you guys have such a good flow.
Agreed. Yeah. It definitely falls into the category of try things. Like Chamath said, I want to do a podcast with you. And I was like, okay, sure. And this is after Kara Swisher and Jim Bankoff will deny this over at Vox. But Kara Swisher's like number 1 and number 2 choices was not Professor Galloway. It was Chamath or me.
Whoa.
So they couldn't get me or Chamath.
Kara and Jason.
They couldn't get me and Chamath, so they went with Professor G. And you see how Kara struggles with him. I mean,
well, I mean, if you compare the Chamath's
portfolio
amazing capital allocation over the past 10 years, which is mostly why I put him on my Mount Rushmore, secondarily to Tweak You, but
I thought you wanted to work for
Prof G. It's that's rough.
We should make. Okay, I got it for our next hit together, boys. We're going to do the anti Mount Rushmore. The 4 worst capital allocators, the 4 worst people. And then we could really get gnarly.
Oh, that's going to be fun.
Man, oh my God. The worst in tech. Which is kind of weird because I'll be on that list, wouldn't I? Most people would put me on that list.
Well, the question is, what's the biggest company ever to go to zero and who is at the helm?
Oh my Lord. Well, I mean.
Was it Enron?
Yeah, I mean, I think, Theranos.
But that
wasn't horrible.
That was nothing.
Would you
that was
put $10 billion on there or just people who are bad?
No, I think bad capital, like for Mount Rushmore, is destroying value. Like Theranos was a fraud.
Yes.
Like it's just there was no
but
value.
It did get to it got to unicorn status, so they did destroy that. The people,
but that's just destroying money. It's not like there was something great and Elizabeth Holmes killed it.
Yeah,
it's imaginary value.
Like a cheap version of Bitcoin. Okay, let's keep going. David, another choice.
Ooh, okay, next pick.
Shout out Professor Cold Takes.
Oh, not Prof
so
G.
many cold takes.
Oh, so ice cold. I just came. I was in Texas during this craziness. I literally just got off a plane a couple hours ago. So
really? Oh, so you're saying Prof G went to Texas and caused that ice storm? He went to Texas.
It was. I spent last night with no water, no heat, in 20 degrees.
This is what happens when Prof G.
That's Prof G.
Visit Prof G. Went to Texas with his cold takes. Go ahead, David.
Ooh, okay.
You're doing good now. I think Bezos Chamath is a surprisingly compelling Mount Rushmore.
Yeah. And then I'm swinging around totally different style, taking Andy Grove as my next pick.
Oh, wow. Ben, look at Ben. So dejected. Ben.
Well, I'm just looking. Now you're easy to beat. Like.
Oh, okay. Come at me.
Ooh.
Oh, how's Intel doing now, David? Did I just crack the
acquired
Andy Grove has been dead since I think it's the 2002 something.
Are you guys breaking up?
The real measure of a CEO is how the institution survives you, which why, my pick of Bill Gates is clearly wildly superior based on the succession plan.
Okay, it didn't survive him too well immediately after he left. Whereas Andy Grove, he left Intel and that thing kept going despite boneheaded decisions for a long, long, long time.
But Ballmer did print money. I look at Ballmer and Tim Cook as like they just extracted all the value of the previous person's vision.
Oh, you got to give Tim Cook more credit than that.
They just ring it out. Tim Cook's like, you know what? Let's
You
take
realize
out your plug.
AirPods alone is a Fortune 500 company, which was launched with Tim Cook.
All right, that's the one.
Apple
You
Watch
mentioned the
alone.
one
It's an
good
accessory.
product. The
Apple Watch is
garbage.
exactly the same way. Also a Fortune 500 company. If
Also
spun out.
garbage product. AirPods, great product. Watch is garbage.
You don't like Apple Watch?
You have to charge that thing every day. It doesn't work.
What do you have the latest ones?
No, but I'm thinking about trying it again. I tried.
Revenue
I
don't
got the-
lie,
I got the
baby.
First, I
SE.
did the
It's great.
third, and now it's up to 6. I probably should try again.
Get the SE if you don't like, unless you want the always on screen, which, you know, I actually view that as a bug, not a feature. I don't want to know what the time is all the time. The SE, it's great. It's cheap. Battery lasts a long time. Get sleep tracking. It's great.
But it doesn't give you the other stuff like you're having a heart attack. Okay.
No, but if you're worried about
At
having a
my
heart attack,
advanced age, I need the one that tells me if I'm having a heart attack
fair enough.
because, you know, with this Robinhood IPO, it's going one or two directions. I don't know. I may need that heart attack. My
Oh.
God, if that company
you
goes
need
down,
life alert.
I need a life alert. I've fallen and my stock can't get up. I think it's going to be a tremendous one. But okay, here we go. Ben, you're back on the clock. You've got your Bill Gates and Pony Ma. Very controversial second pick, but a very solid fifth pick, I will say. Gates was going to be would have been on my short list if Steve Jobs or Elon weren't available. But go ahead. What do you got, Ben? Because now you're going to futures pool, correct?
Yeah, I'm in the emerging managers category for our capital allocation.
Yes.
I am going to move out of the world of pure bits and into the world of atoms here a little bit, and I'm going to go Katrina Lake from Stitch Fix.
Damn it.
Ooh,
God
strong
damn
pick.
it. You guys just did 2 of my picks. That was going to be my final 2.
Yes.
I was going to do
Sorry, man.
Chamath and Katrina. God damn you guys. Tell me
You
why.
got to have a draft board strategy. I knew
I
she'd slip.
started so strong, and now I'm just getting, you guys are running the table now late in the game. Why Katrina from Stitch Fix? Because
So-
obviously it's an $8 billion company. It's a fraction of the size of some of the other emerging. Because we have on the emerging board, we also have Airbnb, we also have Stripe, we also have Shopify. I mean, we got a lot going on here.
Spotify.
So, one, this is an $8 billion company that a year ago was a $1.5 billion company.
Mhm.
So, you got to have some ROIC credit here as as someone managing capital and just doing an unbelievable job compounding the base, building value, getting the shareholders excited. I think this company is like perfectly positioned to just explode out of COVID. And I think that weathering the storm the way that they have, and then the way that all of us are going to go finally buy new clothes, and we've completely forgotten how to do that and show up to an office.
I know, because the 3 of us, people don't know this, but we got a Coachella house together, and we all need outfits.
Oh yeah, we're doing this live.
We're doing it live.
We're actually
going
in
to
person
Coachella
right now
live. I'm so
Although
YOLO
I got to
right
tell you
now.
guys, Jason, I know you
literally-
want to be back with people. I was just on 2 packed planes. It's
can't wait.
It's awful. It's the most terrifying thing I've ever done in my
I can't wait to go
life.
to Tokyo with a packed plane. I can't wait to go to Shinjuku Station, go to Kyoto. I want to go everywhere.
Oh,
I'm
got people
fucking
with
losing
masks
my
down
mind.
around their like
All right.
chin. It's awful.
So now it's on me. You know, built to last is a big part of this. I think you got to be built to last. You know, Jeff Lawson at Twilio, he's young and he's been buying up assets. And
Great
that's a
Seattle
really
CEO.
interesting- Yeah, really interesting. Bumble joining this pack out of nowhere. That's an interesting one. But then
Hot
you
out of the
start-
gates and a $9 billion valuation just after IPO.
and you got to wonder, like, my God, because she was one of the co-founders of Tinder, right? And she kind of got, like literally harassed there, according to reports.
Unbelievable story of overcoming adversity to be one of the most wildly successful
Pretty
CEOs
great,
of all
right?
time. Yeah.
So that she's a great pick. But, you know, when you start looking at the top of this list, you know, there's a couple of businesses that I think are truly unique. And Zoom isn't one of them. Zoom is great.
Ooh. Hot fire.
Ooh.
But that product itself, you know, he came from where, WebEx or GoToMeeting or something. He came from one of those places and he built a better
Both.
version. I appreciate that. And it's certainly a big company and the company of the moment. but I like
You're
very
really
unique.
You're going heavy on product here. You got Jobs, you got Musk.
I just
You're
think product
evaluating
is how
Zuma,
I
it's
made all
product.
my money, Ben. If I bet on the product, and so I am a creature of my previous success, and I think I'm going to narrow it down now because I have 2 picks and I'm going to be done. When I look at the unique products on the list, Shopify, Spotify, and Airbnb are very unique products that did not exist in the world before those people went after them. And so those are the 3 I'm narrowing down from. This is very hard because all 3 of those are incredible. All 3 founders, incredible. E-commerce is just getting started, but then so is audio and so is Airbnb. Let's be honest. I've had Shopify on the pod. I've had Spotify on the pod. I've
Still
never
can't
had
hear you over all the
Airbnb,
flexing.
But Airbnb, Brian said he would come on the pod.
Well, we've done
Did he?
episodes on all 3 of those companies. So
I had Toby on, and he's going to come on again. This is a really hard one for me. I got to pick Spotify, locking in Spotify, because that makes it really easy for me. I have to lock in Spotify. I'm sorry, Shopify. Shopify.
Completely different.
They're very similar.
I heard you say you were locking it in.
I saw your reactions and then I changed it.
Whoa! So unfair.
It's like going like I fold.
you are a poker player.
You're trying to. I'm all in. I fold. I call.
You want to know our hands.
I got to go with Shopify because it's the biggest, and it's e-commerce is just still in the second inning, right? We're so early. So then it just leaves me with Airbnb and Spotify, and I'm going to do a coin toss here. God, it's so hard for me.
Take the 2 5s. You gonna?
Well, here's the thing. I am an audiophile, so my personal interest is with Spotify. But on a business level, I think Airbnb is a bigger opportunity.
It's a fantastic business.
Product. Very hard for me. I'm going to go Airbnb. I'm going.
Okay.
So wait, you're not going Airbnb. You're going Brian Chesky as your great capital allocator.
I'm going Brian Chesney. Correct. I think what Brian has built has been pretty incredible. Now, you might think he's a one-trick pony. He did one thing, but I think both of these are. This is the futures board, right? This is the futures board. Both of those folks have raised a ton of money and they've created a ton of value. They both created over $100 billion of value in 10 years. Spotify has created whatever, 60, 70. So I think it's legit. I struggled over this decision. Ben, you're up.
I just watched you not pick Patrick Collison. And I'm just wondering, like, what was the matter with, like, did you not see him on there? Or like, is there some kind of, and I think, was that correct that you picked Brian Chesky as someone that you would rather park into a business to allocate capital than Patrick Collison?
Listen, they're both tremendous. I just think there is some magic about what Brian built with Airbnb. I'm not saying there's not magic. This is a really hard decision. I mean, we're talking about Michael Jordan and Bird and just incredible players. This is obviously an imperfect process, and I'm willing to go imperfect because I do think Airbnb will be $1 trillion company.
Ooh, that's a take right there.
Wow.
I think Airbnb is just getting started. I'll be totally honest.
You think Airbnb is going to be $1 trillion company before Stripe will?
I think it'll be a horse race between all 3 of those choices.
All right, Spotify, we should make a long bet on this.
Toby, Patrick, and Brian. I think those are all, and if Travis was here, I obviously would have picked him for Uber, but he's not here, so it's kind of hard. Okay, but you're picking Patrick. That's a really good choice.
100%.
I think
you could write in Travis if you think he's got another act.
Oh, I could. You're right. Actually, can I do that? That's an easy one for me. I would put Travis in instead of Brian. Can I change it or no?
It is your show, but you heard me be critical of your pick, and now you're trying to walk this one back too.
You think I'm trying to walk back Brian?
I think it's fair. I think you can. Well, because it's like, Travis is a controversial pick, right? Like there's not.
I wanted to pick a controversial one, and Shopify is the easy one.
If you were to pick Travis, is the justification what his body of work thus far, or his future potential? It's
both. I mean, you have Uber at over $100 billion right now, and you have Cloud Kitchens at $6 billion.
Do you still hold Uber stock?
Yes, I still own. Yes, a lot. I mean, technically speaking, I probably shouldn't own this much as a percentage of my net worth, but I still believe in the company. I mean, it's so obvious that it's an anti-fragile company now. If you stay home, they win. If you go out, they win.
Yeah.
So just theoretically. And then this whole idea that like Bezos is leaving Amazon, but then there's all these stores that are reopening. And now they're doing this idea that every store's inventory is on Uber Eats and Postmates. So if I want wine,
I'll take this bet all day. This whole thing that like Uber Eats and DoorDash are both diversifying out of food and into effectively competing with Amazon's Prime Now offering. I'll take Amazon all day. I think there is.
Obviously Amazon is just great at what they do, but last mile, I don't know, man. You got to think of the size of the network, and then think, Ben, about all the local stores trying to compete with Amazon, saying, I'm just going to put my inventory on these things. And it's just a very lightweight model like Shopify's, where Shopify is benefiting from all this creativity out there. And then they become the platform. Uber Eats or an Uber delivery as the platform, and then anybody's store. So if there's a store that sells pencils and stationery, they're on there and you can get it within an hour. If I want to order stationery and I need it tonight, am I going to wait for 2 days on Amazon or 1 day or just go on Uber? I might use Uber for some things. So.
All right.
All right. So are you switching your pick? Or are you?
I'm switching Brian to TK if you guys will allow it.
We'll allow it.
I'll allow it.
Okay.
I think we all
That's
we
easy
all know
for me. And
your
no
Mount
offense to
Rushmore
Brian.
has these caveats all over it, but we're allowing it. You know, we just know it's like
None
the
of you guys
94
were
baseball
taking
season.
Travis anyway, so all I'm doing is putting Brian back in the pool for David, which I think maybe, Ben, you're scared that gives David an edge because he's going to take it now. Because I think David was trying to talk me into putting TK on there so that he could take Brian.
Yes, I am very sure that David was trying to pick Brian Chesney
I think
this whole time.
David is trying. I think I'm going to predict David's pick. I think he's picking Whitney.
What do you think?
I think you're picking Whitney. You seemed a little enamored, I'll be honest.
Of who am I picking?
Whitney from Bumble.
Whitney. Oh, no, I don't know enough about the dating business.
Okay.
Having
So then
met my
you're
wife
not
when I
picking
was
Stripe.
21 years old before any of this.
Yeah. You going with Eric and Zoom? I can't figure you out.
Bingo.
Okay.
Eric and Zoom.
Why?
Lots of reasons. Let's just take specific to Eric. He's, I believe, don't quote me on this because I might be wrong, but I believe he's the number one Glassdoor CEO, highly ranked leader in the world.
That is why he put that thing in the grading criteria, because he knew that he had a shoe in for it.
What?
Hey, don't let
I'm the only person who
let me make the rules. Great. You let me make the rules.
He's like, oh yeah, and suicide queens are now wild because I have one. Okay, great. The suicide queen's wild because you
competing
got
in this.
Okay.
This competition has Ben Gilbert, it has David Rosenthal asterisk, and Jason Calacanis asterisk. I mean, but like, who knows who's going to win?
I think most people would argue my pick of Travis diminishes my Mount Rushmore because people were not fun.
No, I like it. You're taking risk. You're thinking long term.
Well, let's recap here.
Wait. One more. I would put a word in for Eric, of course. He's created Zoom, the most like existential product of the past year. But even before that, he was number one ranked CEO for years before that, running. I think he's a very, very good capital allocator. Zoom, consumed like something ridiculous, like $1 million, $2 million of venture capital. They raised more than that, but they didn't consume any of it en route to a hugely free cash flow positive IPO. But then the biggest thing is I think this rounds out my portfolio. If you look at my portfolio, we got capital allocation covered. Bezos, what more can you say? Chamath, I got all the upside that Chamath's got for the rest of his career on capital allocation. Then I've got good for the world and a great leader, Andy Grove. I mean, he wrote the book for Silicon Valley. Like, Andy Grove isn't as magnanimous as he was. An incredible story. Immigrant from Hungary, survived the Holocaust.
I respect your choices.
And then I've got the leader.
Little did we know, David was here building a portfolio.
I'm building a portfolio because we're going to get ranked on our portfolio.
Pretty good. Ben, you want to recap yours?
Yeah. So my first pick was Pony Ma from Tencent, and then Bill Gates, legendary CEO of Microsoft and the co-founder of the Bill and Melinda Gates Foundation, the greatest charity known to mankind. What was my next? Oh, Katrina Lake from Stitch Fix. And then we rounded it out with Patrick Collison. Both of those last picks unbelievably slipped through and were available for me.
Amazing. And I had obviously Elon and Jobs, the two greatest creators, I think, of our generation. Toby with Shopify, kind of a dark horse there in terms of Canadian. People don't even understand what that business is or know the name Shopify, even though they use it all the time.
That was a super good one you swapped in.
Yeah. And then I swapped in TK. And I people don't understand how well Cloud Kitchens is doing because they literally do zero press. You cannot find a story about Travis. You can find one about his apartment in Manhattan being used for a party during COVID, which he wasn't at. And somebody had people over and somebody narked or dropped a dime on them for having 10 people in a room. But other than that, he's pretty quiet, right? No press is his new rule. He will not talk to the press, just like many other people are not talking to the press these days because they see it as downside, not upside. And he's just staying focused. And man, I think when the numbers for Cloud Kitchens come out, I'll make a prediction right here. I think Cloud Kitchens and Uber, I think they're going to merge. And I think TK comes back and Uber and Cloud Kitchens becomes one.
I was going to ask if you think, I mean, you took Jobs with your number one pick. Do you think that's where we're headed?
Yeah, I think it's going to be a job situation. I think, it's would be if Uber sees Uber Eats as like a big part of this and there's this giant footprint of real estate that are Cloud Kitchens right now owned by Travis. I don't know that this, who's the guy, Mr. Beast or whatever, doing the burgers?
Yep.
Unbelievable.
That thing seemed to, I don't know how they did that. And I don't know that Cloud Kitchens did it or how they did it, but it felt Cloud Kitchens-esque in its ability to roll out. So he found people who were running burger joints to do his recipe and ship them. Is that how it worked?
I don't think they were running burger joints. I think it was stood up in these ghost kitchens.
So he basically, I'm guessing, did this with Cloud Kitchens. I don't know that.
Overnight national rollout, the brand. It's so interesting. It's like you plugging in a food stack to an influencer. It's like he already had the audience and he just plugged in an ordering system, which is all digital, plus the infrastructure for the food, which existed in a ghost kitchen. I don't know if it was exactly Cloud Kitchens, but
I mean, what if a rapper comes out and, if Jay-Z and Beyonce say, hey, this is our favorite recipe for X. This is our favorite brisket. This is our favorite whatever. And they make their sandwich and it's the Beyonce and Jay-Z burger or pizza, whatever it is that they love from Italy. Oh my Lord. And then
it's so strategic.
Celebrity chefs. Just think of them as distribution. David Chang's, why is he starting restaurants when he could just start David Chang's short rib?
We're talking about it's AWS for the real world. I mean, my brother-in-law works for a virtual kitchen company, which is a slightly different model. They're not in the exact same space as Cloud Kitchens, despite also having come out of Uber. But this space is so strategic, and like even before coronavirus, but post coronavirus world, like this is we are only just scratching the surface of the innovation to come.
Yeah, I think looking at what happened with milk delivery back in the day, where milk was just dropped off every day, the idea that you would go get your milk or your ice, like it was dropped off, it was easier. And then if you go to Korea, jjajangmyeon or other noodles or whatever get dropped off, and there's just somebody who does a run, bento boxes in Japan. I think we're kind of catching up in America that food delivery at scale can be a thing, right? And it can work really well. It's just we happen to have a country that is more spread out in some cases. All right, this has been amazing. Of course, mine, Jobs, Elon, Toby, TK. I think I got a shot at winning here, but honestly, I was off to a strong start and I'm not sure. I think you guys may have caught up a little bit. It's your choice, everybody. Go to our Twitter handles and we'll be running polls and seeing who wins. All right, everybody. We'll see you next time. Go sign up for Acquired.fm. Write a nice review. Give them a $100 for their special Acquired FM LP show.
You don't need to give us a $100. The main show's free. And I'll give a quick plug. If you're an all-in listener, which you should be because it's excellent. I don't know why Jason isn't talking about it more. It's an awesome podcast. He just did a great podcast that really dove into like, what is the media's role in society today and how are tech platforms transforming the role of journalism? And I was actually listening to that the day after David and I recorded our 3-hour history of the New York Times that we just dropped on Acquired. Like unbelievably good compliment. So really fun to like hear those episodes both.
I did that with the Times of London.
The original Times.
Yes, the Times of London. All right, we'll see you all next time. Bye-bye. Great job, boys.